right, good morning. Today is April 26, 2023, and I am back with another edition of the Wednesday live show. And I might try and make it a quick one this morning because there's not a whole lot to talk about. I'll show you in a minute, this has been one of the sort of dullest market months in years, right? And of course, we're right in the thick of earnings season here. Microsoft and Google came out with earnings after the bell last night, and so that's kind of holding things up. And the mega cap stocks or whatever kind of seem to be holding the market up. I believe Apple's coming out with earnings here in the very near future, and that'll be interesting because Apple's got a really interesting chart. But first things first, a little housekeeping here. We have one of the open swing trades, and I know there hasn't been a lot of activity recently, and part of that is due to the fact that we're kind of right in the thick of earnings season. We were heading into earnings season, and of course, we'll look at where the market is because that shares a part in it. But just real quick, as you'll note, this particular stock, AZPN, there was the entry back there. It was like 212 and change, and we got triggered in way back here. And then of course you can see it meandered this day. Boy, it came pretty close to the initial stop, which hadn't ratcheted yet. But then you can see, it was kind of a little shakeout there, and made a pretty good move. It was well in the double digits there, and so they're coming out with earnings after the bell tonight. This is actually a really nice looking setup here, but of course, as we know, anything can happen over earnings. I mean, this thing could gap down here or it could spike up, but anyway, it hit the target. Let's see, what was the target on this? The entry was 212.78 and the target was 234 and change, 234.45. So as of yesterday's close, it was a little over 9%, but up here these couple of days, it was up significantly. So anyway, closing this out today ahead of earnings. It'll be interesting to see what the earnings reaction is and what this chart looks like tomorrow. But real quick, so let's here's the S&P daily chart, right? And if you zoom out a little bit, one of the things that I alluded to was how dull this month was. I mean, look at this range right here. So April is just turned out to be just a really a pretty tight range here. I mean, I don't know, it just looked like maybe close to 100 points for the S&P for the whole month. But prior to yesterday, there's been quite a few little narrow range days, and the market's kind of looked lately like it's in the summer doldrums, but it's only April, right? Typically the summer doldrums sort of set in around July, August, that time of year. That's when you expect the market to be really dull. Last time I was here, we talked about sort of this zone of resistance in this area here, 4,200, 4,100. It's convenient that I'm able to move that little box there just like that. But so, market rallied up into that area, came kind of close to 4,200, but made a little bit of a lower high. And, kind of could have gone either way, but yesterday was interesting because that was sort of the first, sell-off that we've had that kind of, made it look like a little top's been put in on this chart. So that's sort of interesting. But what I wanted to show you was the monthly chart, right? The monthly chart. Oh, I'm having all sorts of problems now. Let's see. Let me get the chart back on the screen. There we go. This monthly chart. Look at the narrow range so far this month. And the funny thing is this this price bar and or candle has been green all month, basically up until yesterday. And then all of a sudden yesterday, it kind of reversed, and the range on this bar, now I got a different chart up here, but on one of my charts, I have an ATR1, which is kind of interesting. You know, when you put an ATR indicator on a chart, it defaults to ATR 14 or whatever, 14 period. If you change your ATR to 1, like a 1 period ATR, and then what I also like to do is change it to a bar chart or like a histogram or whatever, so that you can basically see the ATR of each price bar. So anyway, long story short, it's interesting to note that the ATR, which is basically just the distance from the high to low of the price bar, right? I mean, it's just the range. And so the range of this month so far, and there's what, 3 trading days, including today. So there's Wednesday, Thursday, and Friday, and then that's, the end of April. We're into May. I looked back here to see, there's a really narrow range that looks like June of last year, or I'm sorry, June of 2021. I mean, if you look back on these price bars, you'll see that this is definitely the narrowest range. And so that's why I put the ATR1 on my chart so I could go back and like compare this month so far. And I believe you got to go all the way back to, and quite frankly, I should have made a note of this because I'm just talking off the top of my head, but I believe that you got to go back to to maybe, well, I don't remember if it was December. I don't remember if it was one of these price bars in 2019 or if it was, but I think it was. I think you got to go back to like November of 2019 to find a month that has a narrower range than what we have so far this month. As I recall, it was like 99 something, and then back over here, this one was like 86, right? November of 2019. And the funny thing is, I saw a Bloomberg article that said something like, it's the narrowest range since 2017. Well, that's incorrect. And I don't know, look at 2017. 2017 was one of the strangest years, and I remember this pretty well. Basically, it was sort of just narrow range, dull trading, and look at that. Every single month of 2017, except for one, was closed higher than the previous month. I mean, 11 out of 12 months were higher in 2017, and the market had an incredible rally, and it was just kind of in a straight line. So it was pretty amazing. Pretty amazing. Anyway, when I look at the monthly chart, and of course, 2 days from now, this weekend will be a perfect time to look at the monthly chart because the month will be closed. Usually you don't look at weekly charts until the end of the week and monthly charts till the end of the month, but I still like to look at them just to get sort of a bigger picture view. What I see here is, and I've been sort of noticing this too, or pointing this out, noticing it. That's adequate. Look at where I'm starting this line. This is February of 2022, right? And so this is like, 2022 was a pretty rough year. Last year was pretty rough, and then I believe, that's when Russia invaded Ukraine and all that good stuff. And so anyway, if you go back and look at these levels, and I've put this on the chart before, so let me just widen this a little bit so you can see it. Crazy thing about this monthly chart is basically, between S&P 4000 and 4200, which is where I have that little rectangle drawn there. You can see that encompasses, that's kind of like the I won't call it a permanently high plateau, but look at all these monthly opens and closes inside of that range. And I mean, February and March of 2022, you can see the lows were in that range. And then a year ago, right, April 2022, one whole year ago, minus a few days, look at where that close is right there. look at where the price bar closed, and then the very next month in May it opened and closed at that same level. Then the next month opens slightly higher, and then you got, I think you can see what I'm getting at. So the market itself's in a really, odd sort of place here to think that, it's been an entire year and we're basically, trading at about the same level. So, I mean, actually, this market would need to rally a little bit to close up here. Let's see if I get to close up here. Looks like about 41.30. Well, hang on. Huh, that's interesting because yeah, I mean it's I'm trying to here we go. Okay. I see what I was doing wrong. I have to actually put the crosshairs on that month. So open, high, low 41.31.93. Or no, yeah. Yeah, that's where it is. And so we're at, 40.74 now. So 41.32, call it. So we'd need to rally up to get to where it was a year ago. Sorry about that. Anyway, kind of strange, that this particular level here. So if I step away and just sit back in my chair and eyeball this chart, it's going to be interesting, first of all, to see what happens in the next 2 days. kind of looks like it wants to fold back into the prior month's bar, but unless we get like some crazy news or something, some sort of a catalyst either way, I don't expect a whole lot of price movement, especially on, this large of a time frame in the next 3 days, today and the next day. So it'll be interesting to see what happens in May, whether the market continues to be dull or whether we get some action. Of course, there's the whole debt ceiling thing out there. Here's the weekly chart. The same levels, same levels are, basically acting as resistance, which we pointed out last time we were on the show here. So kind of looks like it's wanting to roll over a little bit, but just a little blip down is basically just still holding this pattern. So there's every possibility that the catalyst for breaking this thing to the upside or downside is going to be Apple. And on my chart here, hang on, I got a chart of one of these Apple charts I got marked up. Yeah, I got a couple of them marked up here. There we go. This is the one I was looking for. So this is a weekly chart of Apple, and you can see it's in this big giant sort of channel. And the remarkable thing about this is that if you draw a trend line from that exact high back in 2022 on the weekly chart down across this exact high in summer of 2022, and then the high from last week, I mean, that chart touches those 3 points exactly, which is pretty incredible. It's pretty incredible to see it, that precise. Of course, Apple is the most widely held, most widely followed stock on the planet. So let's see, earnings are on 5/4 after the market closes. So that's going to be next week. So anyway, the way I figure it, so goes Apple, so goes the market. Theoretically, this could be looked at as a big bull flag. Right? I mean, that's kind of what a bull flag looks like if you zoom way out on it. But at the same time, you can see that, it took a trip to the bottom of the channel and then straight up to the top. And then another trip to the bottom of the channel and then straight up to the top. And so it just you know, kind of seems to me like it's poised to take another trip down towards the bottom of the. And of course, if you look at this is a weekly chart, so these are long periods of time. So if it's headed back towards the bottom of this channel, that could play out over a very long period of time, till the fall. So, um, yeah. So anyway, I can't, obviously I can't tell you which way it's going to break because everything's going to depend on the reaction to Apple's earnings, but I will stick by what I said before. So goes Apple, so goes the market, which used to be, that was the old saying, that most people probably don't realize, but that was the old Wall Street saying about IBM, back in the 70s or whatever. So, yeah, I turned around in my chair and looked at CNBC, which I keep muted most of the time, and I see this something First Republic Bank is. Let's just look at that because this FRC is actually a good example of the old, another old Wall Street saying, which is risk happens fast, right? So, yeah, I mean you can see the highs up here around $225, and now the thing's trading for 5, right? But here's the funny thing: it seems like, and I'm not positive that this particular bank, but it seems like they came out with some sort of press release or good news or something, prior to like this cataclysm here, which is typical because it wasn't Silicon Valley Bank, it was the Signature Bank. Same thing. There was an article literally, a day or two before they collapsed that said, oh, they're buying back shares, everything's great, deposits, all kinds of, one of those good news press releases came out, and then within 2 days, it looked like this. And so here's what I wanted to point out is if you look at the regional banks here, right? Apparently the problems haven't been solved because look at this chart. I mean, it had sort of stayed, and this is a weekly chart, keep in mind. I'm looking at weekly charts here to cut out a little bit of the noise, and especially to illustrate this point. So, for the past, 6 or so weeks, everybody's kind of thinking, oh, well, the Fed and the Treasury got this whole, banking crisis under control, this and that, but looking at these charts here, and especially the fact that the KRE, which is the regional bank ETF, is hitting new lows. It's like breaking down from the stabilization pattern here. And let's see, what's the other one? KBE. Yeah, KBE, same thing. I mean, it's still in its. This is just the S&P Bank ETF, so this one's going to include some of the too big to fail banks, right? But anyway, this kind of shows you that the problem's not really solved. That's what I was sort of getting at. Problem's not solved. So KBE, hanging a little bit better. KRE looks like a mess. So that's just something to keep an eye on. So a couple other things real quick. Let's look at ARK, right? ARK's kind of breaking down. I use ARK as sort of my proxy for risk appetite and how the really risky stocks are doing, right? And so a lot of non-profitable tech stocks, and of course the biggest holdings in this are like Tesla and Zoom and Roku and all that good stuff. And so ARK is a good proxy sort of for what would in this particular market, I mean, you can look at the market and say, oh, had a big rally and it's holding up pretty well, but you look under the surface and it's a mess. And so I think we all know that, it's a handful of mega cap stocks that are actually holding the indexes up. And the funny thing is I wanted to remember to mention this on today's show that last night I looked through like 200 charts and they were a mess. I mean, I didn't see a lot of these things. Were just disasters. They were a mess. There's not a whole lot of charts that have really constructive patterns to them. For the most part, what I did was this: I'd pull up a chart of something, and then I'd zoom back a ways. And a lot of them look kind of like this. I mean, even if maybe the past 6 months or 8 months, don't look too bad. The further you zoom out, the more you realize that there's a ton of stocks out there that look like this, and they're just a mess. And so, anyway, to put things in perspective, I mean, ARK has it's kind of been in this really sort of tight range, but it's breaking down here. And there's something else that's a little concerning and goes to what I was just saying here is if you look at the Russell 2000, you'll see that it's a disaster too. I mean, it's really kind of an ugly chart. And here's the thing is, and of course this is, the 2000 smaller stocks, and this is what we were just talking about, how the mega cap stocks are holding the market up. This is a pretty nasty looking pattern, to be honest with you. It's certainly not encouraging as far as the smaller 2000 stocks, which back in the day I used to use as sort of a proxy for, and it's probably still a good proxy for what's going on under the surface of the market. And so anyway, my point here, looking at this ugly chart, is that if this thing starts to break down, right? If it breaks down below, this trend line, of course there's some support down here, lots of support in that sort of area. But if this thing breaks down, that's going to be really, really ugly. Not good for, the overall market. And that could be why. Look at this. So there's the high prior to the pandemic, right? You see the pandemic sell-off there. And so if you think about it, I mean, here we are. We're in April 2023, right? So 3 years ago at this time, the market was trading around the pandemic lows, right? But anyway, so here's my point is just prior to that, back in January of 2020. So we got 3 years. The Russell 2000 has gone absolutely nowhere. I mean, it's up a little bit, and of course, there was the big rally when the Fed created all that money out of thin air to offset the pandemic, and obviously we're feeling the results of that now with the inflation. So QQQs. All right, I want to make sure I was still in a daily chart. Yeah, this is, we looked at this last time too. This is kind of an interesting chart because more recently we had the big rally at the beginning of the year and a little bit of a pullback, and then the subsequent rally took it above that high, whereas the S&P 500 basically ran up just below this prior high and didn't quite make it. But you can see that it's kind of that run up is starting to consolidate now, and so we'll have to see what happens. Let's go to the weekly chart of the Qs here. Yeah, weekly chart of the Qs. There's a whole lot of resistance like right here, and of course this is NASDAQ 100, which I guess goes back to what I was saying before. It's really super top heavy as far as Microsoft, Apple, Google, Amazon, Tesla, There's a handful of stocks. Instead of the Nifty 50, we got like the Nifty 5 now, right? So anyway, obviously those particular stocks are what's holding us up. So, I'll go back to what I said before. So, next week is going to be the sort of the moment of truth because you got a lot of stuff all sort of coming together. Actually, next couple weeks, because at the beginning of May, you got Apple's earnings coming out. You got this whole debt ceiling thing, which, maybe obviously they're going to raise the debt ceiling again. So I think they've actually raised the debt ceiling for my entire life every time it hits it. So that goes without saying. But, hey, there's always the fun of the wrangling about it and all that good stuff and the threat of not happening. I can't remember which year it was, but they had that whole government shutdown thing or whatever, and they went into panic mode. It was pretty crazy. But so, maybe the market gets a little pop when they pass the debt ceiling thing, but then it's going to be all about the May Fed announcement. And so that's going to be the big dealio. Whether they raise, I think the consensus is that they're going to raise a quarter point and then they're done. They're going to pause or whatever. But the other thing is that, for the past year, everybody's been talking about the pivot or whatever, and the Fed has kept saying over and over that they are going to hold interest rates, at the peak level. Even if they decide to pause in June, they're still going to hold rates at that peak level for the rest of the year, according to them. But unless for some reason uh, there's another crisis, right? Like, maybe we have, they keep calling it the banking crisis, but it doesn't really feel like a crisis unless you're holding some of those bank stocks that, they're in crisis mode for sure. But anyway, so not much happening right now. I mean, we're in like pretty super dull market conditions, but I will say this is that the fact that we sort of ran up to the prior highs, and I mean, look, just even as I'm talking now, we're selling down from yesterday's low. And so if I sit back in my chair and cross my eyes, what I see here is sort of you know well, I don't even have to cross my eyes to see that, we got a little bit of a lower high here, and that it's kind of looking a little bit toppy. So looking a little bit top. I mean, on the daily chart here. Um, and so, maybe, and that, I mean, that doesn't mean anything for, the intermediate term or the longer term, obviously. This thing could pull back, and notice that the 200-day moving average, that blue line, is now sloping up. So you got the market above the 50-day, it's above the 200-day, and so, I mean, that's what the market does. It runs in one direction, pulls back, runs a little bit more. So, um, just in the very near term here, you got kind of just connect the dots here, connect the most recent lows and highs is all I'm doing here. So obviously, a sell down to that trend line would feel like a panic because you'd have to slice through all the moving averages to get there. But, retrace back into, towards, we got close to 4,200. You remember like a few weeks back, I marked all these different zones and stuff. And so, there's each 100 points here is its own zone. And so we may be headed towards spend some time between this zone. Quite frankly, I would love to see the market, make a run in either direction just to add to the action because quite frankly, it's been dull and boring and just kind of a mess. So anyway, so next week's going to be exciting when I do the show. This week, I'm talking about everything being boring, so tune in next week, same time, same place, and there should be a lot more excitement on deck to talk about.